specifically the oil and the growth. And I will let your opinion specifically on that and any other of the commodities that you are seeing interesting for the midterm in this 2025 market volatility, please.
Well, as far as commodity, let me tell you what I see. Copper's had a run and could go much higher. But the key with oil, and I agree with Julian, the energy companies are going to be very integral. But one thing you need to understand about the energy markets in general, okay, there tends to be a lot of volatility and a lot of noise in the market, just in general, because it's based mostly on the physical as opposed to the futures market. And I am predicting that oil could rally here to about 85 because it takes time to drill and refine it. But it's all going to be about the tariffs. As far as other commodity sectors like softs, I'm bullish wheat. I'm bullish, cocoa still, even though it's had a massive run, and coffee. That's what I see in the commodity markets. And obviously, you've just seen the volatility in gold. It's starting to really move, and people are looking for gold right now, just in general. As far as some of the other markets, and just as far as the public, many times the public does buy the high. But as far as Europe, I'm particularly not bullish European stocks. I'm not bullish the DAX, and matter of fact, that I've been shorting the DAX. I'm going to start shorting the DAX more here, but spreading that against the U.S. markets. And as everyone should know, I've been bullish China in a major way since about 15,500, 16,000 on the Hang Seng. And we should, right now we just broke out to 22,000. But I'm looking at a number about 24,000. But it's all going to be about the tech war right now. The negotiations that will definitively happen between the United States of America and China. It's not if it's going to happen, it's how it's going to happen.
Excellent. So listen, I have a question for you, Steve. Keeping with you, and then I'm going to go to you, Julian, with real estate. Steve, you seems to be speaking in CNBC recently about China, and there is a lot of anxiety with real estate in China, but there is a lot of opportunities because I've been speaking with some of my friends that has been getting some sort of exposure, fishing some opportunities in Asia. I want you to tell us about that, specifically if you can elaborate and articulate about the major problem that China is facing with real estate. And then I go to Julian to see how is the vision on real estate in the U.S., which is a major component of the, economic policy of the Trump administration, probably, to try to see how you can improve some of the economics here in the U.S. But Steve, tell me about China in general, Asia. What are you seeing there? And I recently saw you calling great calls about the markets there. If you can give us a perspective, that would be great for our Latin American and Hispanic speaking audience. That would be great, Steve. Thank you.
Let me just say something just in general about real estate. Okay. Real estate is always in the buy. It's always about the buy. So like anything else, what you've seen in China is just a level of hypergrowth of biblical proportion. But the difference in China is this, and it's a very simple concept. There are big buyers out there, but they need to know what they're buying, because if you're getting out of some, they're buying some of these very, very poor performing portfolios. All right. But what you'll understand with real estate will always have some sort of intrinsic value. You tear down the building, strip it, and take the commodities. It's worth something. It's not worth zero. The reality is that it's very difficult for institutions to step in because it's unwinding, the actual beneficial owner of the property, all right, to actually own it. It's like any chain of title. And the correlation that you'll see in the United States is like right now, obviously the state of California is just, it's a disaster. It's just a tragedy. And you're seeing that there are actual funds that are going out there and willing to buy right on the spot. Right on the spot, will give a homeowner money right there on the spot. So you're going to see that, the BlackRocks of the world, Blackstones of the world, the masters of the universe will go into China and slowly try to cherry pick certain asset classes. That's what I see as far as that. And that's anywhere globally. I mean, it's always going to be in the buy in real estate. It's always going to be in the buy and where it's located.
Excellent. Julian, real estate, the U.S. Tell not only the professionals, tell the middle class people, the people that is trying to buy. I know you are based now in Boston. Steve is in Montreal. We have problems in both cities, as you can tell. But we have a major problem in Miami, where I'm based, where the rent are off the roof. And you see people actually, to tell you guys a long story short, I have a friend of mine that today called me. They say they basically increased my rent 10% now, today, in Miami. And then you're seeing that shelter is being moving kind of slow in the numbers of the Federal Reserve. But I don't believe on that, and seeing people paying more. And I want your opinion specifically on the real night of inflation that you were discussing recently with your clients. And I want your opinion on that, because this is a major problem that we're facing with inventories. Please explain the mathematical thing and then what people should do in 2025. Julian.
This is a very bizarre, particularly in the United States. I mean, the prevalence of fixed rate mortgages is unprecedented. It's unlike anywhere really else in the rest of the world. There's nowhere that provides 30-year financing and where you can lock in rates. And I think if you've successfully locked in rates, I locked my mortgage at, under 2.5%. And there is no way I'm selling my property. There is no way I'm doing anything with it. I'll just, I know this is as good as it's going to get. So the problem that you've got is that's killed existing home sales. So what you've done, and it's made stuff very, very unaffordable because nothing is trading. And so that's forced people to buy new homes where, the home builders can pay down, help subsidize the mortgage in terms of their negotiation process. And so you've seen that. Do I think this is going to change anytime soon? I don't. I'm a structural one there. I believe that given the global cycle, US bond